US crude just closed up 9.4% at $78.14. Brent surged 9.6% to 83.30 in its biggest single-day jump since May 2020. The trigger? Trump reimposed an Iran blockade and slapped a 20% toll on Hormuz cargo. Traffic had already collapsed 52% in a week. By the end, you'll know the one currency most impacted and the cleanest way traders are thinking about playing it. A spike this violent is never just an energy story. It reshapes trade balances, inflation, and central bank timing within hours. Currencies react through the terms of trade channel. Oil exporters earn more per barrel, importers pay more for the same energy. So the cleanest oil shock trade is simple. Long petro-currencies against import-heavy ones. Canada exports crude to the US, so higher WTI supports CAD, but USD CAD is a wrestling match. The dollar strengthens in risk-off too. Norway's krone is a purer play. Its fiscal engine runs on Brent, so NOK outperforms European peers when oil rips. On the losing side, the yen and the euro. Both economies import nearly all their crude. Japan buys almost all its oil abroad. A sustained Brent above $83 widens its deficit and grinds USD JPY higher. The euro faces the same squeeze, but it's less oil sensitive. So EUR USD downside stays shallower than USD JPY upside. And the single currency everyone's watching, that reveal is coming. Stick with me. CAD and NOK gain revenue as crude climbs. Long them against JPY stacks two tailwinds at once. Trend and macro funds benefit first, likely positioned for supply risk. Carry traders shorting the yen get an extra push. The dollar plays a dual role. Energy producer and safe haven. It can rally on both counts during geopolitical stress. This is a supply shock, not a demand boom. Gas Buddy expects US pump prices near $4 within days. Higher inflation means fewer rate cuts priced in, lifting yields and hawkish-leaning currencies. The payoff setup is nearly here. But watch the caveats. The IMO called the toll baseless, Chevron refuses to pay, and diplomacy could unwind the 9% jump fast. So here's the reveal. The cleanest vehicles are CAD JPY and NOK JPY. They isolate the oil signal instead of fighting dollar demand. Traders favor long commodity currencies versus import-dependent funders. USD JPY upside is real, but capped by Japanese intervention risk. The caveat that anchors it all, the whole thesis rests on crude holding its gains, and that depends on politics, not price. Trade the direction, respect the volatility, map the reversal. In geopolitical FX, the fastest moves are often the first to fade. Read the full analysis on edgeforex.com. Link is in the description.